All right, let's talk about a real titan of Indian industry, the Steel Authority of India, better known as SAIL. Now, this company is the very backbone of the nation's infrastructure. But here's the million-dollar question for investors, and it's a tough one. Is this a deeply undervalued giant just waiting for its moment to shine, or is it just a classic value trap? Think about it like this. On one side, you have this absolute bedrock of the nation. I mean, SAIL provides the steel for India's vast railway network. That's a huge, stable business. But then you flip the coin, and when you look at its performance, it's consistently trailed behind its faster, more nimble private peers like JSW and Tata Steel. So it builds the nation, sure, but for years, it hasn't really built much wealth for its shareholders. So what is the real story here? What's going on behind the scenes of this industrial giant? Well, that's what we're here to do. Let's dig into the fundamentals, the financials, and what the market is telling us, and see if we can figure it out. Okay, to really get a handle on SAIL, you gotta start with its strengths, right? What gives this company its incredible staying power? We're gonna look at its competitive advantages, what investors call its moat. At its core, SAIL's business is pretty straightforward. It runs these 5 absolutely massive integrated steel plants. They make everything from flat steel for the auto industry to long steel for big infrastructure projects. And get this, with over 90% of its sales happening right there in India, when you invest in SAIL, you are making a pure direct bet on India's growth. So, this moat we're talking about, it really has 3 key layers, things that are almost impossible for anyone else to copy. You've got captive iron ore, irreplaceable assets, and, of course, government backing. But one of them is a legitimate superpower. And here it is, captive iron ore. Sounds a bit technical, but all it means is that SAIL owns its own mines. Now, why is this a superpower? Well, think about it. When the global price of iron ore, the main ingredient for steel, goes through the roof, companies like JSW Steel get their profits absolutely crushed. But SAIL, it's protected, it's insulated, it digs its own ore, giving it this huge built-in cost advantage. Okay, so if SAIL has this incredible, unbreakable moat, you have to be asking, why has the stock been such a laggard for so long? Good question. To answer that, we gotta pop the hood and take a look at the financial engine. And well, that's where you start to see some pretty clear cracks. And yeah, the numbers, they don't lie. They tell a story of a real struggle. Revenue, basically flat. Operating margins, they've been squeezed way down into the single digits or low double digits. And that net profit, wow, it's just a shadow of what it was back in 2022 during that commodity boom. This is not a pretty picture. But if you had to point to one number that's been the real killer for investors, it's this one, return on equity, or ROE. Basically, it answers the question, how much profit are you making with my money? And at a pretty rough 4 to 5%, that's just not cutting it. For a lot of folks, this one metric has been a giant red flag, a reason to just walk away. But just when you thought you had the story all figured out, great assets, poor performance, the company drops its latest quarterly report. And let me tell you, it threw a curveball that nobody saw coming. And this was the number that made everyone sit up and pay attention, a 251% jump in net profit year over year. I mean, come on, a number like that just makes you ask, is this giant finally waking up? But hold on, a headline that good, you have to be skeptical, right? You have to ask, how did they pull that off? Because, and this is important, it wasn't because they were selling steel for more money. That wasn't it at all. It really boiled down to 2 simple things. First, they just sold a heck of a lot more steel. Volumes were up almost 16%, which is huge. They're tapping into that strong demand in India. And second, and this is so important, they paid way less in interest on their loans. Why? Because they've been on a mission to pay down their debt. And honestly, this might be the single best piece of news in the whole report. Profits can go up and down, they're volatile, but a strong balance sheet, that's the foundation. That's what gives you stability for the long haul. Just look at that number, a debt-to-equity ratio of 0.44. That is really healthy. This isn't some company struggling under a mountain of debt anymore. You can see management is being proactive here, fixing the fundamentals, and it is making a real, tangible difference. Okay, so let's recap. The company is getting its financial house in order. Sales volumes are up, so What does the market think about all this? How are investors, the ultimate judges, pricing this turnaround story? Let's check out the valuation. This is where things get interesting. If you just look at the PE ratio, it looks kind of high, but that's a bit deceiving because earnings have been so low. The real metric to look at here is the price to book ratio. And when you compare the stock price to the actual value of its assets, well, SAIL looks like an absolute bargain compared to its rivals. And this quote, this really just sums up the whole argument for investing in SAIL perfectly. You don't buy SAIL for operational excellence. You buy it as a deep value cyclical rebound play. It's not about perfection, it's about timing and value. And you know what? It looks like the market trend is starting to catch on. The technical guys have a term for this. They call it a bullish stack. Look, that's just a fancy way of saying that the stock price is pointing up across the board, short term, medium term, and long term. The momentum is clearly positive right now. So, you can think of the stock price like this. That 155 rupee level, that used to be a ceiling, but now it seems to have become a solid floor of support. That's the new line of defense. And the next big challenge, the next hurdle to clear, is that 175 mark. That's the next battleground. All right, so let's put all the pieces together. You have this incredible moat. You have financials that are getting better, and you have a market that's starting to believe. So, where does that leave us? Let's map out 3 potential futures for SAIL. Okay, the bull case, the super optimistic one, is pretty simple. Their raw material costs, like coking coal, go down, and the government helps protect them from cheap imports. If that happens, their profits could just explode. The bear case, of course, is the exact opposite. But the most probable path, the base case, is somewhere in the middle. Strong demand in India acts as a safety net, while global competition kind of puts a cap on things, leading to more of a steady, grinding climb for the stock. And that brings us right back to where we started. You've got this state-owned giant that's finally getting its debt under control, right at the exact moment its home country is in the middle of this massive infrastructure boom. All the pieces, they really seem to be falling into place. So the ultimate question for any investor is this time different? Is the steel giant finally ready to reforge its own future and become a true star performer?